Are you a real estate investor, or you're looking to become a real estate investor? Well, Joe Biden's tax plans could be changed. What's up, everybody? My name is Malachi, and I'm known as the Realist Realtor. I give it to you real, backed by facts. Today's video, we're going to go over Joe Biden's tax plans and how it's going to start affecting real estate. I started looking into it personally for myself because working in the real estate industry and looking to invest even more into real estate, especially more so for my kids' futures, well, the proposed tax plan from Joe Biden looks like it might be affecting my future plans. So President Joe Biden has been pretty harsh on the real estate game. He's changing some, or proposed to change some of the tax plans that help benefit real estate investors. So one of the things that he's changing is capital gains tax. Currently at its highest level, it's about 20%. He's proposing to change that capital gains tax to 39%. 20%, 39%. Huge. So that might deter a lot of people from investing in real estate. In my honest opinion, I think real estate is one of the only ways that we can invest for generational wealth. I'm talking about for our kids, grandkids, and so on and so forth. Yes, the stock market is great. It's definitely different. Starting a family business, you never know if your kids are going to want to join that family business. So to me, not only because I am in the real estate industry, but I truly believe that real estate is just such a great way to build generational wealth. Now, do I think that this first portion of the tax proposal by Joe Biden is going to kill real estate? No, I don't think so. I think what's going to happen is that if this tax increase does happen, it's just going to deter investors like myself and others from basically selling these properties, keeping them longer, not changing them to anything else, which also turns into a bigger problem because now they're going to start holding on, they, meaning investors, will start holding on to properties longer. And now there's not going to be as much inventory on the market as a normal economy would have. That's just my idea. I don't know if that's actually going to happen, and we don't even know if the proposed tax plan will pass. But I do want you to be aware of that. So if you are a real estate investor or looking to become a real estate investor, it might be a good idea to sit down, reassess those plans with a professional. What's up, everybody? Sorry for the interruption. This is future me. I'm actually editing the video right here on the iPad Pro. But just real quick, I wanted to, while I was editing the video, I noticed that I didn't clarify that I believe this capital gains tax increase is not going to only affect investors. I think it's going to affect just people who own homes that are looking to either pass down the property to their children or, even worse, use the house as their retirement fund. So people like my parents or older generations, right? They bought their house, say 10, 15, 20 years ago. And it's safe to say here in Southern California that the prices almost have doubled, if not doubled. And I think those people are going to be affected because if they're going to use that property and hopefully it's paid off or a majority is paid off and the price is increased significantly, which is safe to say here in Southern California, they're going to get hit with that huge capital gains tax. So now their retirement plan has completely changed because they're not going to be able to save as much after they sell that home. So anyways, I wanted to clarify that. Again, the capital gains tax increase is not only going to affect investors, but again, just middle-class homeowners that are looking to use the profits from their home to retire. Anyways, back to the video. The second portion to the proposed tax plan by Joe Biden is not necessarily to get away or get rid of the 1031 exchange, but it will limit what you can exchange. And I believe the amount is $500,000. Anything above, you have to pay those capital gains taxes, which from portion one, remember, is going to be 39%. Huge. So I think what's going to happen with that, again, this is my opinion from reading multiple articles, other investors' articles and things like that. I believe what's going to happen is those big institutional investors are going to start maybe selling off big investment properties and buying smaller ones, properties that won't actually give a big hit when they come to sell or change or anything like that. So if they can't tax defer their capital gains on those larger properties, again, this is my opinion, I think they're going to start buying smaller properties. So one, say, huge apartment building, right? 100 doors, 200 doors, whatever it may be, which is worth millions. I think what's going to happen is they're going to take that profit before all of this changes and start buying smaller units, maybe a 10 unit or 4 unit, something like that. That would just be my guess. And I want you to be aware of that because, again, this changes the game. If that does happen, it's going to affect not just those big time investors, but middle class, people trying to get into real estate investing. It's going to start to limit, again, the amount of supply that's going to be on the market if those large institutional investors start buying up some of the smaller units. That's just my guess. So if you do have questions, as always, please reach out to me. I would love to chat about real estate. It is definitely one of my favorite hobbies on the planet. So let me know. If you've been finding my videos helpful or interesting, I would appreciate a huge thumbs up and a like on the video. It really helps me to know that I'm putting out good content, as well as get my content out there to the rest of the world. Also, if you haven't subscribed to the YouTube channel, please do so and hit that bell notification to make sure you get notified every time I release a new video. Thank you guys always for the love and support. Have a great week, and I'll see you next week.